What's up? What's up? I am live. Let's do a check to see if I'm actually in. Let's see. Share screen. Entire screen. All right. Now follow restream on. I gotta figure this out. How do I know if I'm on YouTube now? Can you guys see if I'm live on YouTube? Let me see if I can find the video. Oh, it's right there. Okay, put in the live in the general chat. All right. So that go. Okay, can you type something in the YouTube comments so I can see if it works on this software, if it shows it? Thanks, man. Okay, while he's doing that, we're going to start the higher time frame. All right, last week I told you to pay attention to the midpoint of the NFP Friday. That's where we found resistance on Friday in the high of the week. And then right now we failed to get over it during the Globex session, right? If we have a daily close above it, then this 1,000-point drop with a recovery in 3 days is truly going to be significant in the fact that it's time to at least come test out the previous month 50% right here. If we just start doing this swiping action because it was such a large range for NFP, right? We can just, if we decide to slow down, which is the highest probable scenario based off of the week of the month and the month of the year, from a seasonality standpoint, we could be in this range for a couple of days, just slowing down, right? Going to the weekly, looking at the 5 EMA, measuring it. Remember the 5 EMA is a constant variable, meaning we're just measuring the variance. There's nothing significant about it. We're just measuring the variance of it and how far we get away from it before we retrace back to it. Right? And so far this morning we were 2% away. That's pretty healthy. It looks like we've taken out this week's, previous week's highs. So momentum is shifting us back up from the weekly. Right? So right now we've got to make a determination of what we're looking for, because the weekly is momentum is up now and the daily is up, right? That's where the momentum is, right? We're trying to figure out, and this is where it gets complex when you're not in a completely obvious trending market, right? You got to figure out which one is the low of the day or the high of the day between 5 o'clock and 11 o'clock, right? There'll be an obvious move, like right here. This was an obvious low of the day on Friday. It happened around 8 o'clock in the morning, right? This was not an obvious low of the day right here on this day. During this time frame, during the 9:30 to 10:30, this was an obvious high of the day, and it lined up with a lower time frame or a higher time frame trend, right? So our job, low of the day right here, 9 o'clock hour, right? So today might be a little bit complicated when it comes to identifying the high of the day, the low of the day scenario, because we're expecting, number one, a slowdown. I don't foresee us having 600 handle day ranges today. So, with that being said, we're going to have to rely more so on, you know, our levels, our intraday trade, our intraday levels, right? Right now, this can go either way. This can go up and this can go down. There's no telltale sign according to this system, right? I will say, if we go back to last summer, right? This was September. This was NFP in August, right? There was a clear indication downwards. But when we, that doesn't show it. There's one that shows it, right? Where we stay inside NFP, we expand away from it, and then we come back to it. So that's why this is the scenario that like I'm expecting to see, where we go below it and then come back up above it, right? But if we decide to reject that NFP Friday range anywhere, right? Like I'll be expecting the high of the day, right? So that's why I'm paying close attention to this NFP Friday, the midpoint, the high, the low, and how we close on the daily. So right now, we're going to rely more on our daily probabilities than anything else. Right? From a statistical standpoint, didn't update. Oh, I was like, I did new measurements yesterday and statistics for this week. Huh, it's even in the newsletter. I wonder why it didn't go through. I'll have to double check this when I can get this software back up, but I don't remember. Let me check Substack. Let me go check my newsletter. Hmm. In 300. Alright, that's weird. I don't know why it didn't save. And it takes forever to get the software to update. And just boot up. And this should be like that. And if we look at the average ranges, right, the average swings, the long rotation is 92, the short rotation is 99. That's pretty extreme, and I don't expect that to hold. This is NFP midpoint. All right. It's so extreme. I don't know. So Monday or Tuesday, we're going to be expecting the high of the week or the low of the week, right? Right now, because momentum has already taken out previous day 50%, I don't expect it to come back down. Like if we look at the news economic calendar, right? All we have is some auctions. Nobody cares about auctions, right? I mean, we don't care about bills. 3 months and 6 months, that's noise. And I'll have to look that up. I've never heard of that before. There's no real true news that is going to make us have an outside day on both sides of previous days, highs and lows, right? So, moving on. We look at what's happened just in the Globex session. Previous day midpoint, right? We came down and we tested it. This could be a probability of a low of the day scenario, right? But because we broke the Asian midpoint, which is, let's see, right there, Asian midpoint. At 18613. And that's the London midpoint. Six four four. All right. So because we broke this midpoint, the Asian midpoint, from 2 to 3 and 3 to 830, like all the probabilities of, because I've told you guys, if you guys, whether you're ICT, whether you're DR, whether you're an auction theory person, if you guys sit there and you measure the Asian markets, the London markets, you can filter, and what they do by the characteristics, you can filter the probabilities based off of what they do, what the highest probable New York is going to do. And that's one of the main edges I have, is to be able to take all these different characteristics of what Asia did, what London did, filter it in a way to the point where I can see when Asia did this and London did that, then this is the most highest probable thing that New York did, right? And then when you understand these other markets, right, and what they're pricing, you can also understand, you can filter by day of the week, whatever, right? You can also build over underlines, right? And what is the over underline? Saying if we breach this, we already know that if we breach this Asia midpoint, right, then the probabilities shift of what New York would do, and that the probabilities of a trend day go very, very low down, like the numbers go lower, right? And then London can do the same thing, right? This midpoint of London, once we breach this, especially from 8:30 on, right? It tells you where the momentum is going for that session, right? And it tells you the probabilities because that's the characteristic and the variable that you can measure, right? And then it will tell you like once this is broken, what is the likelihood of these lower targets being hit versus the upper targets, right? Because we know that intraday ranges more than it trends, right? Like that these little over under lines are important to understand the expectations of when it's going to get hit during the day, right? Let me go back to restream, make sure everything's sharing. Oh, chat. Oh crap! You guys are typing. You live? Yes, sir. Trying again. Hi. Chat works. PPI, CPI, market preparing for vol tomorrow. Jerry G, yes and no. So yes, those are always news catalysts, and I definitely expect more rangy day today. So in preparation of that, but it's only going to move if inflation spikes back up, right? Right now, what the market's trying to, and they're paying attention to real estate and jobs more so than anything. So during all last year, inflation was a hot topic number, right? So anything that had to do with inflation, right? Like the market would overreact on it, overpricing, what its expectations were. But now inflation is almost at pre-pandemic levels, and the inflation expectations are even below it, showing the fact that now the big thing is, are we going into? We've started picking up trends of growth. So June and July growth, growth measurements started slowing down. Inflation's been slowing down, and so now the market's trying to determine, are these factors leading us into a recession or a regiment where growth is declining and inflation is declining? And they're factoring in the fact, did the Fed Reserve wait way too long to make the initial cuts? So anything that shows any kind of deterioration, right, is telling the markets the Fed Reserve, just like they waited to raise rates too long, according to most of the markets, and then they fixed that by raising rates at the highest delta in history, right? Going from like 0 to 5.5 in like a second, right? Now the market's trying to figure out, did the Fed Reserve wait? They should have been cutting like 25 basis points a couple months ago, right? Due to policy lags, right? But that's why, like, so I don't know. I'm wondering if the CPI comes as forecasted and the PPI comes as forecasted, and it's gonna be a dud burger, But good. Thank you for bringing that up because I completely forgot about that. But that could be what gets us out of this NFP range, right? All right. So now we know that our average daily range, which this code should be done soon, right? Our average daily range is 652. I have no expectations of us meeting that today, right? Because just like Jerry said, like most of the time before big news catalysts, FOMC, PPI, CPI, and now NFPs, right? The market would sit here and chop. So we need to make realistic expectations of what to expect, right? So let's do this real quick. Let's extend our data from 15 weeks further. Like usually I tell you in a range and market, right, you want that quarter's worth of range to understand the actual ranges of the market condition you're currently in and how the market's pricing in whatever it's pricing in. But in this case, because we had an anomaly last week, it's skewing the data. We need to kind of go back further to get more realistic expectations. Because do I think this week's going to be an anomaly? No, I don't. All right, so we're going to go to 1 hour, and we're going to pull that number. And we're going to look at the last 180 weeks worth of range. Oops. All right, so I need to make this 90 days. Let's do that. All right, 331 is a more realistic target. The last 90 days, or we can even do the last 60 days. And it's around 331 to 346. So we're going to use that number since last week decided to skew our data, our range data. And so now this number is telling me the daily range over the last quarter. The reason I do the average 10-day for the daily range is to incorporate any kind of current news, economic news, or earnings that's being priced into the markets, right? So if Asia, right here, put the low of the day in, which that is the 2.5 standard deviation, there's an 81% chance of that getting hit, right? We can see that there's a 66.7% chance that the other side, the other 2.5 being hit, which we hit that overnight right here. So this dotted line is a 2.5 negative, this dotted line is a plus 2.5. Now, we can see that the probability is 89% to hit 0.5, 76% to hit 8, right? So that's a good daily range, and that's lining up with where the momentum is, right? Telling me that there's a high likelihood that that Asia was the low of the day. So, damn, look at this. Let me draw in another one so I can just delete this one. And that lines perfectly up with the last quarter's all-day range. I'm going to do 60 days. And that's going to be 343. Okay, that's more like. All right, so now we know that we took out previous day's highs, which tells us momentum is up, right? However, we know that we don't just move straight up in a straight line, that we have retracements. So what I've done is I went through and pulled hourly time variables, which you can do using the midnight snap. I don't use any set ones, right? Like, so I do usually the 1800, the 1615, the midnight, and then whatever dominant structure, right? Which that's subjective, so I'm not going to teach it. But for me, for you guys, I just want you to do, I'll come up with a list of the highest probable retracements. I'll go through and I'll use the midnight snap, and I'll just go through and test out every single time period, right? So what I do is I use 1615, 1801, midnight, and like 05, right? Those are these numbers right here, right? And then I'll use the standard deviations from Asia, which is this one right here, and this one right here, and have a system that will allow me to do that. Speaking of, I need to fix that right now. All right, 4728. Eight 816. All day has a 47% probability of being hit, and this is already factored in what characteristics Asia and London has done so far. And this has nine two six. That has a 28% probability all day of being hit. All right, let me erase this goofy line. Let me erase this right there. And now let's get our probabilities or our distributions. Right, so we can see while I'm doing this, I want to test this out because I'm working with my coder right now to see what's working before I release this. Switch this back to the 5-minute, which TFO is the guy coding this. He's an outstanding individual. Like, he's just a pure professional. Let's do like this. Let me show the table. Don't need to see range projections, projection table. Boom. So that's a little shout out to TFO. Like, he's just such a genuine guy, nice guy, knows how to code with the best of them. Him and 2 degrees are some of the professional best. Right? So now let's compare and contrast my script to this script. Oh, what the crap is this? The distro. 04, 08, 08 to 12, 12 to 16. Eight, 12, 12 to 16. Okay, on Monday, 108.52. This isn't right. Oh, okay. So this is calculating last 3 days. So I need to go up to a higher time frame on this one. Now it's collecting the last 15. All right, cool. So 44, 41. Sounds good. That's from 4 to 8. So you can see we still have a little bit of downward movement left on average for the 4 to 8. Let me put the time period for that. There we go. Let's do one for the 8 to 12. So this is saying 102. This is saying 103. Now we're cooking. All right, let's do another one for 12 to 16, 0.82, 0.85. Okay. Turn that off. Okay. So now, one thing that's very important, slide these up. 8, to 12, 12 to 16. Now, what's very important for us to do, right, is to wait to see what London's done, right? London has not broken out of its DR range or initial balance range, which is from 3 to 4, right? Once it does that, it's kind of like the market showing its hand to what New York is going to do, right? So if we take into consideration what London has done so far, right? Based off of what London's done so far, we can expect the highest probable thing for New York to do is to engulf both sides of London, right? So from 3 to 4, both sides getting engulfed, right? And we have the retracement probabilities of this coming down and then turning around and going higher, right? And that synchronizes with our daily bias as well, right? However, we're sitting here chopping. One of these days, I'm going to forget to turn that alarm off before I jump on the stream. All right, so now we have to almost sit there, right? It's 6 o'clock, so we know we have a new H4 candle that started at 6, right? And that H4 candle will represent where the momentum is currently shifting. We know that previous day has been taken out, so momentum is shifting up for the daily, and the same with the weekly. But right now, we're trying to line up what London is doing, and is London going to continue carrying that momentum, or from 6 to 10, are we going to be retracing, and then 10 to 2, we're going to shift that momentum. And so when London does this tight range nonsense like this, where it doesn't show its hand, right, we're sitting ducks. Why? Because it makes no sense for me to say, hey guys, this is what 8 to 12 is going to look like. And I have data that I can see what the 8 to 8:30 is going to be, the 8:30 to 9:30, the 9:30 to 10:30, the 10:30 to 1600. However, if I put that in there right now, right, because London hasn't shown his hand, right, it's going to be wrong. So I'll sit here and wait. Let's mark out 2 o'clock highs versus 2 o'clock lows. So from 02 to 06, this is the range. From here, this low to this high, right? We're waiting to see which one the momentum takes us to, right? So if we take out this low, then H4 momentum is going lower. So we can expect this, like something like this, right? Because it doesn't change. Well, let's see. If London shorts is still a range, it's still engulfing, right? It's still engulfing the London, right? And it's still a long confirmation after 10:30, right? And so that is the power of DR right there, because like if you understand what DR is actually measuring, right? Listen, I don't care if you like the community or not, right? Like, I think what M7 does is outstanding, the way he trains his traders to back test and just sit there and think about the quarter over quarter results, not the day over day, right, is outstanding. The way he forces them to position size and take 2 trades a session, that's outstanding. I have individual models that trade nothing like the DR, right? But his data is some of the best out there when it comes to building your analysts for the day, doing your analysis for the day. All right, so now let's talk about, we know we're in a range of markets, so let me set this up. Let's just go over to this screen. Hopefully it's still set up. It is. Jerry G built these awesome little boxes. Let's get off CL. Right? And these are your high-low boxes, right? Let's give it 1 minute. On a grid contraction, and then put on another awesome strip by Jerry G. Thank you again. So these 50-10 range boxes, right? Let's put those on. Let's make them orange and obvious. And we'll make them blue. We'll keep them blue. And basically what I'm using is the minute 5 to minute 9 of each hour, and then minute 9 being the one that to show its hand, right? Right. So for example, if I'm expecting a reversal based off the midlines, guess what? Like this midline up here, right, is like in, as this is printing, this yellow midline is up in here at this time, right? So I use minute 5 to minute 9 and minute 9 for entry, right, to see, because we know that the hourly candle is just like anything else, right? Like each hour candle has an open, high, low, close, and each hour candle has 2 reversals to it. And each hour candle, let's say this is the open, this is the high, this is the low, and this is the close. That means from here, the MAE, or the manipulation as ICT people call it, or the excess as the auction value, auction theory people call it, that would be here. And then the distribution, the MFE, is coming down to here, and the close is here, right? I like to use minute 5 to 9 because I found that when I measure the 5 to 9, right, it's either going to do 3 things. If I see price swiping back and forth, it like this, right, this is actually a better one. This dark blue line is, if I see this kind of stuff, that's telling me that the hourly candle is going to be a small hourly candle and more than likely a doji, right? Or from the 5-9 box, right, the MAE portion of it, right, hasn't been done yet. So we're going to come and we're going to put the MAE, and then the moment we cross back through it, I'm going to buy it because there's a high confidence that the MAE, or the wick low, is going to be already, this is the wick low, and that we're going to distribute higher, right? Or there's a scenario where, this is a good scenario of it, right, where the MAE is in, right, and after minute 5 to minute 9 of that hour, the distribution is going to happen because the MAE happened between minute 0 and minute 9, right? So there's 3 possible scenarios, and I'll repeat that because that was a lot. We take every hour and we think of it as a daily or a weekly or whatever, right? We know that each time fractal has characteristics of an MAE, or manipulation, followed by a distribution, followed by a close, right? So I use minute 5 to minute 9 to identify where the MAE is. Remember, the MAE is the false move, right? Or whatever the retail logic wants to call it, right? And then we're trying to capture the MFE for that time frame. So if we're doing it on the hour, we know 3 possible scenarios can happen around this 5-9 box. It can open, and from minute 0 to minute 9, it can put that MAE in, right? And remember what the MAE is. Let's make this a green box so it makes more sense for you guys. Right? So right here is an hourly candle. Let's write that on there for the viewers to see. Hourly candle. All right. Boom. Let's make it white so you guys can actually see it. Hourly candle. Right? So when the hourly candle opens, right, it's like this, right? When we're paying attention to the previous hour midpoint, we'll say this is the previous hour midpoint, right? And from minute 0 to minute 9, we'll say that it came down, tested the midpoint, right? So price came down, tested the midpoint, rejected the midpoint, and then distributed around minute 9, right? So we know that the moment it crossed back over the 5-9 box, right, there's a high likelihood that the low of that hour is in. So for example, right, this is minute 0 to minute 9. And then from minute 10 to minute 19, we come down and we put the low. And we could, at this point, we're still thinking maybe this was the high of the candle, right? The telltale sign, did it come back up and retest any of the 5-9 box? No, it just sold off, right? We know that markets don't move just in a straight line. Then it comes back and starts retesting. It's not showing its hand yet, so we have to sit on our hands and wait. And then at this moment, right, when we burst up through the MAE, we can safely assume that this is the low of that hour, and we're looking for higher prices for this hour, right? So this is the scenario where after minute 9, it puts the MAE in. This is a scenario, this hourly candle range right here, where the MAE for that hour got put in between minute 0 and minute 4, right? The telltale sign is that we can never get back above minute 5-9, right? And so that's the second possible scenario. And the third possible scenario is we get an hourly doji. And how can we tell if we're going to be in a doji candle? Well, most of the time, right, the hourly doji is predictable based off that hour that you're on. Or if you're swiping back and forth to minute 9, right? So this is the minute 9 right here, right? And when you see it swiping back and forth, that's telling you expect range consolidation, whatever you guys want to call it. Does that make sense? Because I was killing time. Does that make sense? Let me know in the chat. Because I was just killing time to see if it wanted to show its hand. Because I'm going to have to jump here shortly. Very interesting, or it makes sense. I take it. Okay, so now it's starting to show its hand. All right. And because I have to jump and actually go get the desk, right? Like I'm going to have to just see what the probabilities are if H4 momentum goes to the upside. And so it's telling us it's an upside X plus like that. Right, so probabilities, if we take out this high right here, from 8 to 10, right, we know from 9:30 to 10:30, let's put our opening range stats on. Average opening range is 259, so from 9:30 to 10:30, we can expect 259, which is not typical. That's so damn extreme. we're going to divide that and chop it in half. So use this Monday because I know this is averaging the average daily range over the last 10 days, so all last week skewed it. So I'd rather be short than long. Last week, if you notice, especially people in my DR, I mean, not in my DR, in my Discord, they knew that I was taking the higher number because of the market that we're in. I don't believe that we're in that market anymore. The market will tell me if we're in that market, and then we'll go from there. So we're going to shoot for 125 for a 9:30 to 10:30 range. So we're going to say that the 9:30 to 10:30 range would be associated with that midline, or it's going to be up here. And there's a cool thing if you have DR data, right? You can tell, and I'm not here to sell DR by no means. Like, I might use DR, but I'm not here to sell it. Maybe if he pays me to sell it, I'll sell it to you guys. But I'm not a DR salesman. I just love his data and the way he does his data. But because London hasn't shown his hand yet, and I actually had to jump, we're not going to try to get too precise with it. Well, we try to find where the 8 to 8:30 is, the 8:30 to 9:30, and the 9:30 to 10:30, right? Because that's unrealistic to do, right? Because it's just a guessing game at that point. Right now, the most concrete data we have is saying that either 9:30 to 10:30 is going to take out both this London high and low, or it's going to be above it, right? Which is why you see that I put 9:30 to 10:30 right there. And then we also know that based off of what's happened in Asia and London so far, that the rest of the day is going to be long. So this is what I'm seeing, right? So now we have our probabilities, and we have our ranges, and we have the overall structure of the highest probable day. Now remember, I knew you'd like that, Costa. Remember, we're not going to trade this blindly. We have an over underline right here for a reason, right? And if we're above that line, we're expecting to hit these trade towards these, use whatever systems you have that, trend higher, right? To achieve these targets right here, right? All right. So with that being said, I do have to jump and I have to knock out the newsletter. Any questions so far? I'm still working on the data set for the members where you guys will, once I, listen, I have the rest of my life to set this up, so I'm in no rush. Right now, it's more important for you guys to come start understanding the workflow. And while you guys are doing that, me and my friends like Jerry and Costa, we're building data sets that you'll be able to follow along as I do this and do this step by step by step by step the same way that you see me doing, right? And so as I do it, you should be doing it as well, using the same, we're all going to be using the same data, we're all going to be using the same indicators, and that way you can get proficient at doing this yourself. All right, guys. Hopefully this was helpful. I feel like I definitely rambled a lot today, but hopefully you guys actually learned something and you actually understood what I'm doing with my hourlies. Like, was this a good explanation of how I view the hourlies? So if you look at my sergeant's time training, I told you how to identify the consolidation, the reversal, and the trend using the previous hour midpoint. Now I incorporated an additional feature using the 5-9 box. right? And once Jerry codes these two elements together, right? I know you're a future millionaire. You're waiting for the ES. Listen, I'm a busy dude. Like I got so much stuff on my plate. I'm just working slow and smooth. It will come, I promise. Um, did this part make sense? This extra variable that I gave you guys, the 5-9 box. So these aren't. I mean, I guess you could trade them blindly, but this is an extension of our analysis, right? Right? It's not tradable. It can be tradable when I have people who do trade it, right? Look at Mr. 930, right? He trades this like a boss, right? But like this is just so this is the overall view of the highest probable trade, right? And this is identifying the market condition within that high probable trade. And then you have individual models like Captain Backtest, or the Midnight Snap, or whatever, some other things that we're going to be working on that are very, very high probability, that synchronizes this, the high probable trade, with the market condition, and then the trading model is going to have its own set of statistics that line up with those two elements that will allow you to press the trigger. So you know when you press the buy or sell trigger, you're taking the trade that has the three sets of statistical probabilities behind it. And that's what true stacking probabilities mean. But hopefully you guys have a great day. It was an honor, and I really appreciate you sharing your coffee time with me. Later. Now, how the hell do I